Most people believe wealth is built entirely on a spreadsheet, tracking the slow, predictable march of a 7% annual return. But what if the most lucrative asset class in your portfolio cannot be bought on an exchange? The traditional definition of compound interest, earning interest on your interest, is the absolute bedrock of modern finance. Yet restricting this mathematical miracle to just money leaves the vast majority of your wealth-building potential completely untapped. How do we unlock the exponential returns hidden within our own capabilities? The answer lies in a radical reevaluation of what we consider an investment. While capital compounding requires time and money, applying financial compounding principles to personal growth requires intentionality and strategic foresight. We are talking about human capital, the collective economic value of a person's skill set, knowledge, and experience. When you treat your intellect and your social ecosystem as appreciating assets, the trajectory of your net worth fundamentally changes. You are no longer just saving money. You are actively engineering your capacity to generate it. Let us define exactly what this means in practice. In a traditional brokerage account, a $10,000 investment might generate $700 in a year, and the next year, that new total of $10,700 generates even more. The growth curve bends upward. When investing in non-financial assets, the mechanism is identical, but the yields can be infinitely higher. Acquiring a single new ability does not just add a linear bump to your resume. It multiplies the effectiveness of every other capability you already possess, creating a compounding loop of value creation. Consider the compounding nature of skills investment. Imagine a proficient software developer. Their baseline value in the labor market is strong, dictated entirely by their ability to write efficient code. Now imagine that same developer invests focused time in mastering public speaking and basic behavioral psychology. These are not just three isolated skills sitting side by side on a professional profile. They interact dynamically. The developer can now build the software, persuasively pitch it to venture capitalists, and design a user interface that perfectly triggers user engagement. The intersection of those distinct disciplines creates a rare, highly compensated niche. The market always pays a premium for synergies. You are no longer competing with millions of programmers writing standard code. You are operating in a category of one, where your unique combination of talents commands exponential returns. This is the true essence of skill compounding. Every new framework learned acts as a multiplier on your existing baseline, drastically increasing your earning power and, consequently, your capacity to fund traditional financial vehicles. This dynamic becomes even more critical when we analyze the shifting macroeconomic landscape. Automation and artificial intelligence are rapidly commoditizing single-track technical abilities. The modern economy heavily rewards cognitive flexibility and cross-disciplinary expertise. A professional who only understands data analysis is highly vulnerable to technological disruption. However, a professional who understands data analysis, strategic communication, and global supply chain logistics becomes an indispensable architect of business strategy. Their value compounds because they can connect dots that specialists cannot even see. The principle of compounding extends with equal force into the realm of human connection. Networking for growth is often fundamentally misunderstood as the transactional exchange of business cards or superficial social media connections. True relationship compounding is about building a dense, interconnected web of mutual trust and reciprocal value over decades. Just as a diversified portfolio protects against market volatility, a robust professional network provides a massive hedge against economic uncertainty and career stagnation. When you establish a deep professional relationship with one highly capable individual, you do not just gain access to their immediate knowledge. You gain secondary access to their entire network. If that person trusts you, their endorsement transfers that trust to their connections. This is the network effect in action. One introduction leads to a collaboration, which leads to a joint venture, which exposes you to an entirely new industry. The geometric expansion of opportunity perfectly mirrors the mathematical curve of compound interest. The true explosion of wealth occurs when these two forces, skills and relationships, collide. Your skills give you the substance to provide immense value, while your network provides the leverage to apply that value at scale. A brilliant idea without a network remains a frustrating hobby. A massive network without underlying skills is just an empty echo chamber. Combining human capital with a compounding network creates a self-sustaining engine for exponential wealth generation. Let us examine how this translates directly to your financial bottom line. As your unique skill stack makes you increasingly valuable, your active income rises. This increased cash flow allows you to maximize contributions to your retirement accounts, real estate investments, and stock portfolios. The compounding of your personal growth directly accelerates the compounding of your financial assets. You are feeding the traditional wealth-building machine with a much larger shovel, compressing the timeline to financial independence. Furthermore, a compounded network brings proprietary deal flow, the absolute best investment opportunities, the ground floor startup equity, the off-market commercial real estate deal, the exclusive private partnership rarely make it to the public market. They are circulated privately within trusted networks. By the time an opportunity is available to the general public, the exponential growth phase has usually passed. Your relationships grant you access to the closed rooms where outsized returns are actually generated and distributed. This integrated approach also provides unparalleled downside protection during a recession or market correction. When corporate budgets tighten and layoffs begin, the specialists who only perform one easily replicated task are usually the first to be let go. The individuals who have relentlessly compounded their skills and cultivated deep industry relationships are retained. They are the versatile problem solvers. And if they do face a setback, their network acts as an immediate safety net, surfacing new executive roles before they are even advertised to the public. The resilience forged by this strategy was starkly evident during recent global supply chain disruptions. Companies did not just need traditional logistics managers, they needed agile thinkers who could renegotiate complex contracts, understand shifting geopolitical landscapes, and communicate transparently with panicked stakeholders. Those who possessed that compounded skill set were not just surviving the crisis, they were securing massive promotions and lucrative equity grants. The intense economic pressure tested their foundation, and the synergies held incredibly strong. To harness this power, we must adopt the mindset of a venture capitalist managing our own lives. A venture capitalist does not expect a massive return tomorrow. They invest capital, provide strategic guidance, and wait patiently for the exponential hockey stick growth that materializes years later. We must apply this exact patience to our non-financial assets. Reading a complex book on behavioral economics today might not yield a cash dividend this week, but it lays the intellectual groundwork for a massive negotiation victory 3 years from now. Implementation requires a deliberate, ruthless allocation of your most scarce resource, time. Just as you automate a monthly transfer to your index funds, you must automate your learning and relationship building. Dedicate a specific percentage of your week to acquiring knowledge completely outside your immediate field. Study history, evolutionary psychology, or emerging blockchain technologies. The goal is to build a diverse mental toolkit that allows you to see profitable patterns and opportunities that narrow specialists completely miss. Simultaneously, you must rigorously audit your social and professional circles. Are you spending time with people who challenge your assumptions and elevate your baseline thinking? Wealth-building relationships are not built on passive agreement. They are forged in the fires of intellectual friction and shared ambition. Seek out mentors, peers, and even mentees who represent entirely different industries and global perspectives. Offer massive, unprompted value to them first, without the expectation of an immediate reciprocal return. The compounding effect of these daily actions is imperceptible in the short term, but absolutely staggering over a decade. In year 1, you are simply a young professional struggling to learn a new language or awkwardly attending industry conferences. By year 10, you are an international consultant leveraging a global network to broker multi-million-dollar deals. The massive gap between those two realities is not luck or privileged access. It is the mathematical certainty of compounded personal growth executing over time. Ultimately, the most secure wealth you will ever possess is the wealth you carry between your ears and within your contact list. Global markets will crash. Fiat currencies will inflate. Real estate values will fluctuate based on interest rates controlled by distant central banks. But the ability to solve complex problems, synthesize disparate information, and mobilize a team of highly capable individuals? That is an asset class that is entirely inflation-proof and immune to market corrections. We must completely stop viewing our careers and our investment portfolios as separate, unrelated entities. They are two powerful engines driving the exact same vehicle toward financial freedom. The financial compounding handles the deployment of capital, while the personal compounding dictates the speed and volume at which you can generate that capital. By elevating your human capital, you are effectively increasing the interest rate on your entire life's work. The math of wealth creation is undeniable, but the variables you plug into the equation are entirely up to you. Stop waiting passively for the stock market to hand you financial freedom. Start investing aggressively in the assets that you completely control. Build the rare cross-disciplinary skill stack. Cultivate the high-leverage, deep-trust network. The exponential returns are waiting for those who understand that the ultimate compounding machine is not a bank account, but the investor themselves.